Saturday, August the 1st, we are going over the latest results from the portfolios. It was a down month in July of 2020. Let's take a look. Here is the All Strategy Access, 77 strategies. We are in a 31 out of $34,000 drawdown. Let's take a look at how that happens. It's down 18,000 on the month, and so you can see similar months where there have been losing months. You know, last July was a losing month as well. Bounce back of 28K, and it's in a good second half to the end to the rest of the year. Also, by the way, there was an error in this spreadsheet. This April of 2017 was duplicating this, and that has been fixed. So that was an error. This was the same. April 2017 was the same as April of 2018. Now that's been fixed. So also, there's a minus 23,966 month here, and we have other losing months in this portfolio. Here's a 14,000, a 4,000, and so it's not the worst losing month. We've had some tough days and some tough streaks, and so pretty good second half outlook though. And I think we'll come into some more volatility as we come into the election. And we like volatility. We also like low volatility. We just have had some wide-ranging chop, which is challenging with V reversals. We've talked about that. We have two new strategies that we're adding, and I'm going to go over that in a minute and how that would affect the All Strategy Access portfolio. And so we scroll down, we look at the results. Here is the drawdown curve, and so you see the drawdown is right here, right there. It's been right at this level in May of 2019. It's been at this level before. This is the worst level right here. And so just a really tough month, end of the month actually. The first part of the month was okay. We made equity peaks about 7 trading days, and some of the 7 trading days from the end of the month in some of the portfolios. And then we just got, you know, from this point here, it was making its way back, and then just really massive chop as the market was very aggressive at doing things it doesn't normally do on such an extended basis. And we went over that, and we have some new strategies for that. And so how does that affect? If you have the All Strategy Access portfolio, I'm going to be sending out 2 new strategies. One has been added to the portfolio calculator, Tick Fader, E-mini S&P. This makes an incremental change in the portfolio without changing the risk profile much. So you're in a $31,000 drawdown, and when we add this system, you'll see how this changes and how this changes. This goes up. This number 76.35 goes up to about 77 something, and your current drawdown does not just go away. So that you would increase your risk profile a lot. So anytime you do something, you should check it, test it. Don't just play ad hoc. Just if you put in Tick Fader, E-mini S&P, the new strategy, then this number goes to 77.78 from 7,600. You're at 30,000 instead of 30. It was 31 something, and so you're 4,300 from your worst case drawdown. And one of the reasons why we say wait to start in a drawdown is to buffer any worst case drawdowns. If you start during a drawdown in this time frame, or at this level, not time frame, but at this level, then you can buffer that worst case drawdown. We saw that in the 200K portfolio, and we'll go over that in a minute. When we have increasing volatility, I do expect drawdowns to get worse at some point as volatility in markets rises, point values and ranges go up, and we have to make adjustments as we go. And so this is done well on the year. All Strategy Access, we made some adjustments in March, in April, and it's been consistent. This month was minus 18,000. You see with Tick Fader, it's minus 15,000. So I don't believe in making drastic changes in portfolios and all of a sudden throwing in a bunch of strategies that are at equity peaks and then saying, hey, this new setup is at equity peaks, risk another worst case drawdown. I want to transition, and incremental transition was with Tick Fader and potentially the Fed stimulus trading system that we released. It's a standalone system. It's only worked since March, and so I would trade that separately with a separate risk profile if you trade it. Maybe the worst case drawdown since March, but it's been straight up since March 23rd, so you could trade the Fed stimulus trading system, and I'm going to show you what I'm talking about. Here is the tick fader that we added to the portfolio, and I will be sending this out to all strategy access and subscribers. And here are the results for the last 18 months or so. We went over this in another video, and here is, it says dynamic TB, and we've got some different settings. I'll send you the details in the email. But since March, the drawdown is less than, I don't even see $1,000 drawdown here. It's possible, but you could risk an extra 1,000 trading this if this pattern persists. Even since March of 2018, this has done well. Only to do poorly during the first month or so of the pandemic. So I don't know that we'll get any pandemics, but if you, any more news flows that will be as bad as a pandemic, it's possible. We're coming up on an election, so anything could happen. But if you take this and you take that drawdown out, and then you add this to it, pretty good results since this time frame. Since I don't anticipate new pandemics, but realistically, since March 23rd, only about $1,000 drawdown. So, but then not a long history either. So you can trade this at your discretion with a separate risk profile. I'm sending this out. It's not in the portfolio calculator yet because it has such a short history that it doesn't really match. And so I'll be sending these out to you if you have the all strategy access. And so this is the first portfolio that we're looking at and modifications you can make. And so tick pulse or tick fader, E-mini S&P, take that out. These are the raw results for the month of July, minus 18K. And if you started in June or July, it's been challenging. If you've been with it for the year, then it's been a normal drawdown, and you've had some gains from the beginning of the year to buffer this type of loss. And so you could consider adding additional contracts if you have the capital and the trading psychology to do that at these lows. So I do anticipate at some point we'll make a worst case drawdown. So you have to be ready to buffer those and then make adjustments as those happen. Tick fader, E-mini S&P, consider adding that to your setup. You'll be getting that in your email. Let's go over the rest of the portfolio. So the stock index portfolio 2020, it has a new worst case drawdown this month, and it was down 10,577 this month. It's had a good year, and so if you've been trading this, you've had the capital to buffer that. You see worst case losing months. It almost made the same amount of loss last year at the same time. And so July of 2019, minus 97.25. You see seasonally, May has been a bad month. You see minus 9,000, minus 9,400. And so you see, I'm just going through all the losing months, taking a look at these. And so seasonally, it's hard to say seasonally. You see another minus 6,300 there. It's hard to say. Here's a minus 6 and minus 12. It's hard to say that seasonally you can do anything seasonally because this year is so different. Why would it be seasonal this year? But 1, 2, 3 out of the last 5 years have lost in July. But in August, really strong. September had the last 2 years have been down, and last year October was down, November was good, December was down. And so these are some of the seasonal things that you could take a look at. I don't place a lot of weight in seasonality mainly because we have a short history. It takes 30, a sample size of at least 30. So we don't have 30 Octobers and 30 Novembers, but we can look back. October of 2018, that was a big month. November of 2018, December of 2018. There's a lot of volatility in 2018, and so seasonally, it's hard to say what's going to happen this year in an election year. There's not enough data, we don't have 30 election cycles to look at. We'd have to go back 120 years to do that. And so looking forward to August. Strong the last 3 years. strong back in 2015, and one of the things you could do for this portfolio, so you have to buffer this sometimes. It makes a worst case drawdown, and then oftentimes it can bounce when the market is extreme in its nature. It acts in a very strong way that it doesn't normally act, and so you could add tick fader to this setup, tick fader E-mini S&P. Let's see what that would do. It would sit at a worst case drawdown, but a lower level of a worst case drawdown. And so you are right here. Right here at this. This is sharp. I like sharp drawdowns. I don't like these wide, slow drawdowns. So I don't like these. But I prefer sharp. I didn't draw that very well. Sharp, the sharp bounce back. And so no guarantee that there'll be a sharp bounce back, but anticipate better price action in August just because of the extreme nature of the market. In July, let's look at stock index 36. It's in a, let's see, I have tick fader on there still. Tick fader, I got to remove that. So tick fader was down $12,000 in July. Right here, minus 12,000. It's up on the year, and so if you've been trading this, you have capital to buffer some of these worst case drawdowns and down months. You see a minus 18K month there, and you see some. Let's look at the drawdown curve as well. So here's the drawdown curve, normal drawdown. This is not at a worst case drawdown. It has a lot more stock index strategies, and so it's just right here in a normal drawdown that occurs very frequently. And so you have to also consider longer drawdown periods, 6 to 9 months. This only trades the stock indexes though. So you have to be able to withstand those drawdowns. It's a normal part of trading and stock index portfolio 36. Let's look at the 200K portfolio. Now this one is, let me scroll down the screen. It was down on the month as well. It's near a worst case drawdown, more volatility. We had an equity peak about 7 days ago. I like these sharp drawdowns, really. They give you good opportunities to get in, and sharp drawdowns are more likely to bounce than the slow grinding drawdown of this. This is sharp. So you have this equity peak right there about 7 days ago, and then just a sharp drawdown as the market was is extreme. It almost felt like it was out to get us. As a trader, if almost every trade you're in about a 7-day period, you're just stopped out at the lows and it bounces, or stopped out at the highs and it reverses. It's like it's aggressively attacking you. It feels like that sometimes. And so I'm looking for a sharp bounce back. In this, we buffered. We were in a worst case drawdown in the first quarter, see? So we had an increase in volatility. You had a worst case drawdown by about 5,000. Then it's had a nice run up, and we're back here at these levels. And it's a good time to enter if you want to buffer a worst case drawdown or buy a dip in a portfolio in a drawdown. And so that is the 200K portfolio. And what would this do with the tick fader? So tick fader, once again, it's not going to make a big difference in any portfolio. One system is not going to make a huge difference. It would still have a losing month. It would be, your drawdown would be 23 out of 25.5 if you have the 200K portfolio. So let's take out tick fader. Let's look at the 25K. It was up on the month. It's in a $38.50 drawdown. The risk to worst case drawdown is about $6,800 right here. So it's a good time to get in on that one. It was up 41.52 on the month. It's only 10 strategies, so it's it's slower. It's less risky, if you can say that. I hesitate to say anything's less risky. It's not that there is risk involved when you trade futures, but when you trade, sometimes when you trade less strategies, the cycles happen more slowly, and so you can have sharp drawdowns in this portfolio as well. You can hit a worst case drawdown as well, and so there is always risk involved when you're trading futures, risk of rapid drawdowns and losses. So you need to be well capitalized to manage those, but if you get in on a drawdown, you can buffer a worst case drawdown better. So that is the latest on the 25K portfolio. We keep it the same as it was. And so let's look at the micro stock index and gold portfolio. Now this one's also near a worst case drawdown, $600 away. Good time to get in. Let's look at the results. Down 2,000, first losing month of the year, 18,000 on the year, and just extreme chop the last 7 days. It was making its way back towards equity peaks as well from a drawdown. You see that right, pull the pin out, right in here, it had bounced, it was coming back up to here, and then it took this sharp drawdown. We had this sharp drawdown the last few days of trading. Look at this sharp drawdown right here. Screams down, makes a worst case drawdown, and then it bounces. And so looking for the same thing here. Historically, when a portfolio makes a worst case drawdown at the end of the month, a lot of times the tone of the market will change on a monthly basis. It's weird how that happens. I've seen markets have 1 month patterns that are just very aggressive and very difficult to trade, and then all of a sudden it just disappears. It was just for 1 month, and so we will monitor that as we go. So minus $2,000 per micro. What would happen if you added the tick fader to that? We'll add 0.1 here, and so it would have been $250 better. It increases. It doesn't increase. It doesn't change your risk profile much. You're $571 away from a worst case drawdown with tick fader, and then without it, you are $450 away. So actually $550 away. Not a big difference in your risk profile if you add tick fader, E-mini S&P to the micro stock index and gold portfolio setup. So here's the drawdown curve once again. Let's look at the 100K portfolio 2020. $16,000 drawdown out of a 20,000 max drawdown. A lot of these systems are affected by the recent market chop, and you see this normal drawdown in this portfolio right here. Here's the drawdown. Good place to get in. And liquid day trade portfolio, 16,000 out of 25,000. These last two portfolios have held up. All these have held up their worst case drawdowns, even as bad as it was, except for the 19 system stock index portfolio. That's the only one that hit a worst case drawdown. So 5,800 on the month, it's down. Here is the drawdown curve. It's been here before, due for a bounce. And we have one more portfolio to look at in this mini webinar type of a video for the monthly results. SR counter trend 234. It is in a 19,000 out of $28,000 drawdown. This just trades all the SR counter trend strategies in a wide range of markets. Down 4,700 on the month. It has been a difficult SR counter trend environment the last 4 months of trading. It's still up based on the first 3 months of the year. Stellar first 3 months of the year. Since the Fed has stepped in, it's been harder on SR counter trend. We've had interesting moves in gold as well. So gold and silver have been very volatile. So let's look at, so yeah, it's held its worst case drawdown. We talked about how it was at this point right here, good entry point, it bounced. It's come back down a little bit here. Another good entry point right here into the S or counter trend portfolio if you just want to trade one methodology over a wide range of markets. There's several different variations of this one methodology, S or counter trend 2, V2, V2M, S or counter trend 3, and S or counter trend 4, and it trades this. There are 40 different strategy setups in this portfolio. So that is that's the video on the day. Once again, I'm going to go over the new strategies I'm sending out for all Strategy Access subscribers. That is the Federal Reserve Stimulus Trading System, also Dynamic Tick Pullback. I'll be sending that out. And here is March the 23rd when the Federal Reserve implemented their stimulus package. And basically a good catch the falling knife type of a strategy, which doesn't typically work based on my testing, as well as tick fader, E-mini S&P, long back test for that. That's been added to the portfolio calculator. Those are the results on July. For July 2020, August trading starts tomorrow night, Sunday, August the 2nd.